Welcome to Business Math video number 60. Hey, just another short video here about sales tax. Now, here's a little diagram here. Logging company in Finland get some logs. You know, they have skidders and big trucks that get all the logs. The plywood manufacturer in Finland gets the logs, makes plywood. The plywood manufacturer in Finland sends to plywood distributor in USA. Gel Boomerangs, the company I used to run, which manufactured boomerangs, got the some plywood in the USA. Gel Boomerangs made the boomerangs. They sold them on to Kite Flight. The Kite Flight finally sells them to the final customer. What about sales tax? Sales tax is only paid by the final customer when it is bought, and when an item is bought and it's made to its final destination. Sales tax must be paid. So look at this. Where is the sales tax here, right? It's all the way at the end. So tax is paid on the retail price. So when the customer buys the boomerang, they pay the tax. Tax is not paid on wholesale price, right? Logs, plywood, boomerangs. Oh, there's the final customer, right? So tax is not paid on wholesale. So when Kite Flight buys the boomerang from Gel Boomerangs, they do not pay sales tax. Now, there is an exception. Let's look. Gel Boomerangs goes to the paint store and buys paint and paint equipment from the store. Now, usually they have some paperwork filed with the paint company with all the proper numbers, so the paint company knows that Gel Boomerangs is an official business and they are allowed to buy wholesale. So what happens? They go and they buy paint and paint equipment. Well, get this. Because the paint has not made it to the final customer, meaning the paint will end up on the boomerang, no sales tax is paid on that paint. But the paint equipment has made it to its final destination, so sales tax is paid. Right? So there's an important distinction. It's always the final destination. Now, I used to be in this situation. You could do one of two things. You either, at the moment of buying it, you pay no tax on the paint and tax on the paint equipment. Or the more difficult way is on your local tax forms later, then you have to fill in and estimate what your sales tax should have been for something you accidentally bought at wholesale. Now, point number 2. Just want to point something out about this. And we already saw this the last 2 videos. I want to talk about the flip side of the coin. And there's always, in accounting and business, there's always flip sides to the coin. One person's cost or expense is another person's price or revenue. All right, so Gel Boomerang sells one boomerang to Kite Flight. But check this out from Gel Boomerang's point of view. It costs Gel Boomerang $7 to make, but they charged Kite Flight $4. Okay? But to Gel Boomerangs, when you sell something, it's 14 bucks. Now let's switch over to the flip side of the coin. Here's Kite Flight. Kite Flight sells one boomerang to a customer. Well, guess what? Well, how much did Kite Flight pay for it? $14. And then the customer paid this. So this has nothing to do with sales tax, but it has to do with flip sides of the coin, right? Gel Boomerangs is recording revenue of $14. But on that same transaction, Kite Flight, on their completely different books, is recording a cost or expense for $14. All right, so point 1 about sales tax, always the final destination determines the sales tax. And point number 2, sometimes it's helpful to see both sides, flip sides of the coin. In this particular situation, we saw that revenue and cost for one person's revenue is another person's cost. All right, next video, we'll see how to create an invoice from scratch. All right, see you next video.